In this video, I'm going to be breaking down the best order blocks you should be using in your trading, from the high time frame point of interest selection all the way down to using them for your entry criteria. This video is going to help you. I'm going to dive super in depth. And if you do enjoy the video, all I ask is you drop a like, comment, and hit the subscribe button if you do enjoy. It helps the algorithm, it helps the channel, and I'm trying to grow my audience for technical videos as I feel like they provide a ton of value. So without further ado, let's jump into the video. Now, first you may be asking, Mac, what is an order block? So this is the best definition I could come up with my own words. I didn't want to plagiarize any words or anything like that, but an order block is essentially a zone where significant institutional orders come into the market that end up pushing price in a significant way. So if you're familiar with supply and demand, it's a similar concept, but it's essentially the area that is responsible for the big move. If you're looking for longs, it's the last order block. So the last area before a big buy move comes in that you notice, like it's very, very obvious. Same thing for sells, right? It's an area where the market moves away from extremely quickly, where institutional orders are placed, right? Because we as retail traders cannot move the market like that whatsoever. So like hedge funds, central banks, etc., people who actually can move the market, these are the areas that they are getting in, and that's kind of what an order block is. Don't worry, I'll be showing many examples throughout this video. So there are three types of criteria we look for when choosing our order blocks for both the high time frame point of interest as well as the entry. So the first one is it has to sweep liquidity. So it has to take out stop losses before we can consider it a proper order block. The next one is it has to create an imbalance in price. So it sweeps liquidity and then it causes an imbalance in price. And then thirdly, it breaks structure. So it has to sweep liquidity, cause the imbalance, and break structure. When all three of those are met, when that criteria is met, then we can begin to decide, okay, this is a proper order block. I want to look to either look for confirmation entries out of if it's a higher time frame, or look to set my limit or take a market execution out of. All right, cool. So here we have a diagram. Of course, I will show this in the live charts as well, but I just want to show you a diagram before we jump into there to give you a better understanding. If you did see my free strategy video, then you will be familiar with this kind of diagram here. But anyway, you can see that we have some sort of liquidity build up, and then we have a move down and then a break above. So the order block is going to be this candle right here. It doesn't have to be the opposite candle. So some people have a rule of thumb that if you're looking for buys, it's going to be the last sell candle before the big move up, and vice versa for sells. So the last buy move before the candle down that goes down. But for me, it just has to be that last candle or series of candles before this significant move in the opposing direction. So it could be a bullish candle, it could be a bearish candle, but just be familiar with this drawing right here. I'm going to show a better one, obviously, when we are on the live charts here. But the imbalance in price is going to be where the candle closes. So this will be the top of the candle from here to here. And then a new candle will print, leaving behind an imbalance. So that shows significant amount of liquidity coming into the market because, again, we can't move markets like that as retail traders. So when we see that, it's a footprint from the institutions, pretty much that they're getting into the market at that price point. And a lot of the time, price will retrace back into that area where the institutional orders were put in to grab those orders and continue in the other direction, or reverse and head in the other way. So regardless, very key areas that we want to be looking to enter the market, or areas we want to be looking to look for trades out of. So you can use it as supply and demand, whatever you want to call it, but I like to use the term order blocks because it's down to the kind of precise candles that you're selecting, but it is a very similar concept. So now let's jump into the live charts and I'll pull up some nice examples for you all. So here's a first example on Euro USD from this week. Me and the community ended up using this area to potentially look for shorts, and it's a perfect example to dive into this kind of topic. So when we're looking at this price action here, you can see obviously we have some old highs up here right there, and then you can see we have some old highs over here. If you don't look to the left as a trader, it's something I highly suggest you do, because looking to the left, we're able to use previous data and see, okay, where did these significant moves come from? Because they're not going to be coming from the right, they're going to be coming from the left. So if you didn't know that, there's a little tip. But anyway, I want you to pay attention to this order block over here and look, okay? So if I zoom in over here, you can see we had this candle that swept liquidity like I talked about, caused a move down, and it broke structure. So we broke structure here. We also broke structure here. And where did that structure break come from? It came from this order block, right? And you can see you can use this candle, or you can use these series of candles. It's entirely up to you, but we want to be using order blocks that had that three criteria. And this is an order block that I would be using for my high time frame POI selection. So this is where I'm going to be looking to enter trades. Now, not off of this area, but that's when I would jump to the lower time frame and look for an entry if it's in my session, whatever it may be. But still, all we're doing here is waiting for this area to get hit. And if we play this out, you can see what happens once we do. So we trade into this order block right here, and this is where you could be on the lower time frame looking for entries. But look at how the market reacts out of that area. So again, swept liquidity to the left, caused an imbalance in price, and broke significant structure. Now let's move on to another example. I'm going to show the high time frame ones first, and then I'll jump into the entry ones. Here I have another perfect example from this week on GBP USD. I was actually looking for shorts out of this area this week. I ended up taking AU instead, but it was the exact same point of interest across all pairs. Let's take a look at this price action to the left. Right here, you can see we have this candle that sweeps liquidity to the left before causing a move to the downside. Just going to drag this down a bit. So you can see this candle here was responsible before this one to move the market down, right? So we want to mark out this whole area right here, but most importantly, the bottom of the candle and the top of the candle, this whole kind of area here. This is our order block. So then if I play this out, you can see what happens when the market retraces back into this region. We tap this order block, and then the market starts to push to the downside, right? Order block, swept liquidity to the left, cause an imbalance. We retrace back up into the imbalance, into that order block, and that's where we can look for our shorts if we're bearish. Vice versa for long. So I'll continue to find some more examples for you before I look at the buy side. Here we have another example from this week once again on EU. Paying attention to this price action here, you can see we had this candle that swept all this liquidity to the left, right? So we had this candle, swept all this liquidity, right? Then it caused a move to the downside, right? When we zoom in on this price action though, you can see that there was another candle responsible for the exact same move, but a more recent candle, right? So we had this order block right here. This candle traded into this order block and then caused a move to the downside. Not only did it cause a move to the downside, it caused a break of structure below this low. It also swept liquidity to the left and it caused an imbalance right here. So this is going to be a great order block we want to use. And again, one of our order blocks that we were looking at this week as a community. Some of the members caught some beautiful shorts out of here. So let's just play this price action out and let's see what happens when the market trades back into this region. Here you can see we stab into the area and then we start to break to the downside. Now, this can't just be used anywhere. The order blocks have to be in line with the high time frame. So you don't want to just be using any order block. You want to be aligning it with the high time frame direction. So if you haven't watched my market structure video yet, I posted a free beginner/intermediate course a couple videos ago. In that video, I touch on market structure super in depth. So if you're not familiar with what I mean by following the trend, go watch that video. It's super in depth, like I said, and obviously all for free. So go check that out. But when combining the market structure, your high time frame analysis with these areas of interest, you're going to be on the right side of the market way more times than not. And you're going to be getting in at significant areas where other institutions are getting in, right? You don't want to be entering trades in random areas that have no significance. You want to stack probabilities in your favor as much as possible. That's our job as traders, right? We're never going to be certain. We're never going to know 100%. But all we can do is stack the probabilities in our favor, align that with our trading plan, et cetera, and that's how you're going to be a consistent, profitable trader. There's many parts of this game, and one of them is POI selection. It's super important. So now that we have the POI selection down for the sells, I'm going to show you some examples from this week on the longs. Here we have an example of a bullish order block. Right here, you can see this candle swept liquidity to the left before causing a move to the upside, causing a break of structure, as well as leaving behind multiple imbalances. So this is going to be a region where we as traders are going to be wanting to enter the market, whether that be off the order block itself if you're a swing trader, or where we look for confirmation entries on our lower time frames. So here you can see the market comes into that order block and then we continue to move to the upside, right? So this is a great point of interest. Let's take a look at another example. Here we have some beautiful examples on AU of the market just continuing the market structure, the bullish market structure, and the market retracing back into those bullish order blocks that we've been talking about. So here's a nice example of one. This series of candles here, you can see they swept liquidity to the left. So this swept some sort of liquidity, caused a move to the upside, and then you can see the market retraces back into this region and then goes and repeats the same process. So now once we get a break of structure out of that area, we don't really want to be looking at that old area anymore. We want to show interest on the new area. Here is a perfect example. We have this candle that swept liquidity to the left before causing a move to the upside, leaving behind an imbalance, and as well breaking structure. If I just drag this across, you can see the market trades back into this region and then continues to move up. Now, another rule of thumb is usually in a bullish market environment, these bullish order blocks are going to be respected. And then when they break, usually that's a sign we're going to see a market shift in the opposing direction. Same thing for sells. If we're bearish and the market is bearish, usually the bearish order blocks will hold. So supply and demand, bearish order blocks, bullish order blocks, similar concept, but make sure, again, I go into much further detail in that beginner intermediate course video that I have on YouTube. So definitely go check that out after this video. I will link it there because I do think you will have a much better understanding. If you're not familiar with these concepts, watch that one first and then take a look at these ones. Again, similar to what I just said on AU, when market structure is bullish here, for example, in the hourly, we're bullish, a lot of these order blocks are going to hold, right? Here we have one that swept liquidity to the left, causing a move to the upside to break a structure. And you can see we come in and then we break away from that. Then we have this order block right here that swept liquidity to the left, causing a move to the upside. We come in, trade back into that. Same thing here, break a structure to the upside, trade back into this order block, continue the upside. See how these all hold until they break. And when they break, usually they will all be used as counterparty liquidity. So liquidity in the opposing direction, and then vice versa for sells. They will hold up until they don't, and then there's most likely a break of structure. Now I want to show you the order blocks that you want to use if you're looking to enter a trade. So here's an example from this week. This is going to be the AUD short that I took this week. I'm going to show you an exact example, and then I'm going to show you the live trade breakdown. So I'll interrupt this video to show you the live trade that I took on this one, resulting in 2% profit. Beautiful stuff, but just showing real time the exact stuff that I'm teaching you right now. So we had this order block right here that swept liquidity to the left, right? Causing a move to the downside, leaving behind an imbalance as well, right? So all I wanted to do here was wait for the market to come into this region, and then I wanted to look for a lower time frame order block to place my entry. Now let me show you the live trade breakdown. AU is a little bit more clean to me in the sense that I do think we run these equal lows, and hopefully an entry opportunity comes that allows that. You guys see here, fair value gap entry. If you did use the order block, you would have gotten even better risk reward. But I just wanted to throw in some audio there and give you a little breakdown of why I took this trade. So yeah, same POI from the beginning of the video on AU. I was looking at GU as well, but it just wasn't looking as clean as the others. And it was just obvious to me that DXY was going to have a run to the upside just because looking at all three pairs, it was a clear sign of bearish momentum. So just want to throw that in there now. And yeah, hope you guys enjoyed this video. I'll put on a little bit of music and yeah, just beautiful, beautiful stuff. Great day. Great job, great week, and yeah, talk to you guys later. Here's the exact same example from GU earlier where I was talking about this order block. Now let me show you on the lower time frame where you could have used a lower time frame order block to get into this trade. So here on the 5-minute time frame, all we're doing is waiting for the exact same process, right? We're waiting for a new order block in the intraday time frame to show. So here, swept liquidity to the left here, caused a move to the downside, causing break structure. We're in our higher time frame point of interest. Now we're on our lower time frames to look for that exact same process. So here, swept liquidity to the left right here. If I draw this across, right? This is where you could place your limit, or you could look for a lower time frame confirmation. But say you just had your stop loss above the high and then you want to target down here. You can see what happens. The market dives into this region and then we break to the downside. Again, it's the exact same process as the high time frame point of interest. We're just looking to use it for an entry on the lower time frames, right? So here we swept liquidity to the left. We caused a break of structure to the upside. So if I just mark this out like so, we left behind an imbalance, right? So this is the order block that we want to be using. And you can see this is where you could either have a limit on there, like I said, and target the highs, or you can jump down lower to like the 5-minute and look for the exact same process to happen, right? Break of structure, leaving an imbalance, look to enter anywhere within here. So it's beautiful because it's the exact same thing. We're using the fractal nature of the market. So if you don't know what I mean by that is The markets are fractals. So the exact same entry criteria you see on the high time frame happens all the way down to the seconds time frame. It's just obviously the more high time frame it is, the more valid it is, right? And that's why I like to use the high time frame order blocks as a point of interest. And then we jump down to these lower time frames to find that exact same process to place trades. And it helps so much. Here's another example tying it all together. So we have a high time frame order block right here that swept liquidity to the left before causing a break structure to the upside, leaving behind an imbalance. Then when the market comes in here, that's when we look for the exact same process just on the lower time frame. So for the 5 minute, etc. So we need to see a break of structure. We need to see one that has all of the 3 criteria that we look for. So right here, you can see we break above the high, right? We have an order block. This is where we want to look to place our limit. It swept liquidity to the left before causing a move to the upside, right? Caused an imbalance, swept liquidity, break a structure to the upside. So high time frame area, now we're looking to do the exact same process. I'll say it again and again and again because I want to ingrain it in your head. And then you want to target the old high, okay? So you can see the market comes in, touches into that order block, and then it moves in our favorite direction. There is going to be times where you get missed, and that happens. That's just part of it. But the precision that you get with this is super, super nice. That's what I like a lot about it. You can use the imbalance sometimes to enter if you want to, but this video really isn't about entries per se. It's just about showing you the areas that you can look for an entry and then add that into your trading style. You could have a completely different entry model, but this is something you could pay attention to that could ultimately help your trading. I hope you enjoyed this video. Please drop a like, comment, subscribe if you're new. It means the world. Like I said at the beginning of the video, I'm trying to grow my technical audience, and the only way to do that is to get love like you guys have been sending me. So I appreciate it all so much. Drop a like for that live trade as well. I had to throw that in here. And if you're interested in how I trade and want to see way further in-depth breakdown videos, etc., check out the RM Trading website in the description. You can see everything that's included there. And yeah, I'm going to leave on that note. So I appreciate you all, and I'll see you in the next one.